Okay, good morning, everybody. Could I please ask you to take your seats, including my colleagues. Welcome to the 30th Annual Bank Conference on Development Economics. I'm Shanta Devarajan. I'm the Senior Director for Development Economics and the Acting Chief Economist of the bank. And I'm delighted to welcome you all, and I'm really excited about this program. But before we proceed, I want to mention that on Friday night we lost one of our most respected and best loved colleagues, Jan Walliser, who died of cancer rather suddenly. And since this is the first World Bank event since then, I'd like us to observe a moment of silence. So if I could ask you to please rise for 1 minute in honor of Jan Walliser. Thank you. Okay, so as I mentioned, we have this very exciting program, and I thought I would just say a few words about why we chose this topic of political incentives and development outcomes. I mean, I think for those of you who submitted papers, I probably don't need justification, but I just wanted to mention the intellectual journey that led us here. I mean, if you go back to development in the 1960s and so on, and frankly, the whole economics profession, we were looking for welfare improvements, policies that would lead to an increase in welfare. And those were policies where the welfare gains dominated the welfare losses, and so therefore there was a potential for a Pareto improvement. Now, that approach then came under criticism because we always assumed that there would be some kind of transfer from the winners to the losers that would then enable us to achieve that Pareto improvement, and those transfers may not have taken place. And as a result, there was a whole flurry of activity around trying to identify those winners and losers and trying to see who should be protected and who should be recognized as a clear winner. And this led to a whole rash of work on the distributional consequences of public policies, particularly things like trade liberalization or subsidy reforms. But that too raised a puzzle because in many cases, particularly in the areas of trade liberalization or energy subsidy reforms, you found that the winners outnumbered the losers in developing countries. You found, and in particular, among the poor. And yet, these policies were resisted. So in countries where the median voter was poor, and these policies would leave the median voter better off, you still had difficulty implementing these policies. Indeed, politicians who ran on platforms against these policies, they would run on platforms to say, we will protect the energy subsidies or the water subsidies, would get elected and re-elected and continue to get elected, even though the life of the poor kept getting worse in those countries. And I think that's what led to a much more nuanced look at political economy, which is to look at the incentives facing politicians. And some of the work that people like Stuti Kamani and Phil Kiefer did in the early 2000s, as well as others in the profession, kept asking this question, what are the incentives facing politicians if voters might be voting along different lines? Say voters vote along ethnic lines or tribal lines or caste lines, or voters are not aware of the relationship between the public policies and the politicians whom they're voting for. And if the politician knows that, then that leads to a whole different set of incentives, where the politicians can then advocate for anti-poor policies in countries or in states where where the majority of voters are poor and still guarantee election and re-election. And it's very difficult for politicians who run on a platform which, if elected, I will implement these pro-poor policies, to actually get elected. And I think it's been very interesting that in the last, say, 15 years, there's been a whole proliferation of research in this area of identifying incentives facing politicians. And there's been quite a lot of new data, and we'll see in this conference a whole series of papers that uses creative use of data to actually estimate some of these incentives in a constructive way, and also see how we can actually use this knowledge to improve the incentives facing politicians so that we might achieve development outcomes. And that's the goal of this ABCDE, and that's the goal of our work here. So with those words, now I'm going to follow the standard bank tradition, where my job is to introduce the person who will introduce the plenary speaker. So I will introduce Asli Demirgic-Kunt, who's the Director of Research at the World Bank, and she will introduce our keynote speaker. Asli.
Welcome to this year's ABCDE conference. I'm very pleased to be chairing the first keynote of the conference, which will be given by Luigi Zingales. Luigi is a chair professor at the University of Chicago Booth School of Business. I have been a very long-time fan of Luigi's research on finance and development. He has identified very early in his career the importance of culture, trust, politics as key factors in development, and he has written extensively on these issues. If there is anybody in this audience who hasn't read his book, Saving Capitalism from Capitalists, you should read it. It's just as relevant today as it was written. And Luigi is not only content writing papers, publishing, just understanding the world, but he has a passion to engage with and change the world. Then, of course, politics is very important. It's front and center in this challenge. So, without further ado, let me extend a warm welcome to Luigi Zingales. Looking forward to hearing his thoughts on political obstacles to development. Thank you.
Thank you very much, Asli. Thank you very much to everybody for this invitation. I'm very honored to be here as a keynote speaker to the 30th conference on development. And in particular, I'm very keen of talking about the political obstacle to development. 15 years ago, as Asli reminded us, I wrote a book with Raghu Rajan from the provocative title, Saving Capitalism from the Capitalist. And the book was started on a very basic idea, which was we understand as financial economists that the development of financial market is good, and why we don't see that so pervasive around the world. And yes, was a book conceived in the late 90s, early 2000, when the prevailing view of financial market was more optimistic than it is today. Today, people look at measures that in the past were measured as financial development, like credit to GDP, as a measure of excesses, as a measure of distortion, and so on and so forth. However, even today, most people will agree that some institutions, like, for example, a credit registry institution, are institutions that favor the development of credit, and they favor in a positive way. Having a centralized place to know whether I pledge my asset as a collateral, I think is useful basically to everybody but the crooks. So why do we see so much resistance around the world in implementing those measures. And, you know, since then, we have looked at institutional development, and many people have looked at institutional developments around the world, and it's not that easy to implement institutional development. One of the questions that political scientists raise is why it's so difficult to become Denmark. And I think that it is difficult because it requires a lot of institutions, including a different culture, different expectations, that cannot be done overnight. But in the case of a credit registry, I'm not saying that can be done overnight, but is within the realm of possibility of any government, of basically any country with a minimum level of enforcement and bureaucratic efficiency. So why is it so hard to sort of achieve that? And our sort of pretty pessimistic conclusion is this is so hard because the very incumbents who have political powers don't like it. In fact, one consultant of the World Bank told me that many years ago, they went to Mexico trying to implement a credit registry. And to their surprise, they found that the local banks were actually quite resistant to the implementation of the credit registry. And said, wait a second, shouldn't the banks be the primary beneficiary of a credit registry? After all, if the borrowers pledged multiple times the collateral, probably the largest losers are the very banks that were opposing that. So why are they opposing it? And the answer is very simple. If I'm a local bank, I end up knowing anyway who is trustworthy, who is not. I end up knowing through maybe the grapevine whether you have pledged your collateral already or not. But if I am a foreign bank, or even a bank simply out of town, without those networks, without those connections, then I am a huge disadvantage. And a credit registry will put me on an equal footing, and as a result will make it easier to have competition, and competition will reduce margins. So the very incumbents are opposing financial development. Why? Because financial development hurts them. And hurts them, in a sense, in two ways. Hurts them because financial development breeds competition. That's the case of the credit registry I just described. And hurts them because many of the institutions that are necessary for financial development to succeed are inimical to incumbents. If you're trying to have, for example, good enforcement and really an unbiased enforcement of the law, that's not in the interest of who is in power today, because we all want the law to be enforced equally for everybody else except us. And so I think that if you can get away with unequal enforcement, that's actually something that incumbents want. However, that book had a message of hope. The message of hope is that international competition can, in some sense, fix the problem. Why? The idea was very simple, and there is no point in strangling local competition if international competition was around the corner. If I am a local privileged incumbent, I can use my unique access to credit to take advantage of most of the investment opportunity in my country. I can until foreigners are left out. The moment foreigners come into the country, then I find myself competing with them anyway. At that point, I better compete with a good financial system that compete with a crappy financial system. This is, in a sense, is not that unlikely the story that many people have used, saying that wars are generating efficiency, because if I am at war, I try to have the best institution possible to win the war. And in a sense, that's in the same spirit. The second idea is that once you realize through international competition and especially openness of capital markets, that the advantage you take in distorting these markets is limited, then you might want to flip the other way around. And the best example that we had was actually France, that for the better part of the 50s and 60s and 70s use financial markets to do industrial policy in a major way. And once they had to confront with the openness of capital markets, flip around and actually became a proactive agent in favor of financial market developments. And the irony and the reason why France looks very good as an example is because the very same government who won in 1981 on a platform of nationalizing banks, by 1983 was actually promoting the future market in Paris and a better financial system overall. However, with the perspective of today, there are important limits in that book and also in that perspective. The first one is, if you want, an excessive emphasis on financial markets. I think financial markets are important. However, what we use financial market for is an example of an institution that requires some government intervention to take off. And in general, I think that there is more than just the financial markets that require some government intervention to work. Whether this is government intervention is to create the fundamental institutions or government intervention to maintain the competition in the marketplace. And in fact, the idea of that book can be developed further by trying to drive a distinction that is often lost in the political debate, not just in the United States, but in most countries, of what are policies that are pro-business versus policies that are pro-market. In fact, the two agendas seem to be pretty common if we limit ourselves to the idea of enforcing property rights. The business community wants an enforcement of property rights. The international business community wants enforcement of property rights. And the development of markets requires the enforcement of property rights. So in that sense, the two agendas are quite similar. However, business people like competition only when they enter into a sector. Once they are in, they want barrier to entry to have higher margins. And so a policy that favors competitive markets is a policy that most of the time finds opposition from the very same business community that proclaims to be in favor of markets. And I think that this is the fundamental point that I raise in my second book, A Capitalist for the People, saying, where do we find the force, where do we find the political support for a system that not only enforces property rights, but also enforces the right of competing on a level playing field? And this is actually an important distinction between two branches of liberalism. But there is one branch, it was mostly a European branch of liberalism, that sees actually the role of the government as an antitrust authority as a fundamental role of the government. Here I quote the only Italian economist of the 20th century worth reading, Luigi Einaudi, who also happened to be the president of Italy for a short period of time. And he stated very clearly that one of the roles of the government is to level the daily trenches that producers put behind themselves to create an unfair advantage. So it's not only the role of the referee, it's also the role of the person who tries to make the playing field level. And I think that while sort of you consider this an essential component of a thriving economy, then you realize that maybe international competition is not enough to generate that. So It's true that international influence in developing countries wants, pushes in favor of a better enforcement of property rights. That's absolutely in their agenda. They are less clear, and because maybe it's not in their agenda, it's less clear that they push in favor of a competitive market economy. And this is where, looking at the United States, I arrived to the conclusion, who is quite unpopular these days, that the only force in favor of a competitive market economy is actually democracy. And not only democracy, but, believe it or not, I wrote in 2012, some form of more populist democracy in a positive sense of the word. Why? Because I look at the history of America, and America itself was founded on a revolution, a popular revolution against monopolies. Most people think that the famous Tea Party revolt in Boston was a revolt against higher taxes. In fact, that revolt was a revolt against the East India Company that was dumping tea and had a monopoly of importing tea in the United States. So the American Revolution is a revolution against monopoly, is a revolution in favor of competition. And throughout US history, we see that when monopoly reaches an intolerable level, we have some popular revolt against monopoly. And the case in point is the end of the 19th century, beginning of the 20th century, where actually antitrust was invented in the United States. And was invented, it's very important to remind people, was invented at a time where economists did not understand very well the distortions of monopoly. So the Sherman Act is 1890, happens to be the same year that Marshall wrote his Principle of Economics book. So I doubt that Senator Sherman had read the first version of the Marshall book. And so I doubt that American politicians were so much in love with the distortion, the so-called Harbinger triangle of inefficiency of monopoly. The reality was very much linked to the American Revolution, that power corrupts and absolute power corrupts absolutely. And this is true both for economic and political power. So it's not only true of political power, it's also true of economic power that inevitably transforms itself into political power and is distortive for that reason. And so I think, and I wrote that in 2012, and unfortunately I was more prescient than I wanted to be, and I said, looking at the situation in the United States, some form of populism is inevitable. And then the question is, which form will it take? Will it take the form that the People's Party in the United States took? It took the form of the progressive era of the fight against monopolies, or will it take more a nationalistic, maybe racist bent, which unfortunately has always been associated with populism as well. It's very hard to find populist movements who don't degenerate into nationalist and racist movement. And that is one of the fundamental problems. But that analysis was very US-centric. And so what I want to do today is want to extend some of those ideas to the problem of economic development in general. The role of this conference, the role of all the conferences that have been taking place in the last 30 years here, is to ask the question of why countries are not more developed. And it's kind of a tautology saying, as was reminded to us a few minutes ago, that development doesn't take place because the powerful don't want to. The question is, number one, how do we define the powerful, and how do we explain that the powerful don't benefit from it? Okay, it's saying that it doesn't take place because who is in power doesn't benefit is almost tautological. We need to explain, well, what are the incentives and who are the powerful, and to some extent, how we can change that. So I feel a little bit embarrassed to speak in front of such a distinguished audience, and while I've worked a lot on financial development and political economy, I'm not in any form of the imagination a development expert. So I'm going to butcher 30 years of development history or history of development economics to simplify it to the maximum and to make my point clear and across. I think that at the very nutshell, the economic development is a combination of three factors: abundant capital, qualified labor, and a system that allows them to be combined in the most efficient way. And how do we achieve these results? First, clearly, if you want to attract capital, we need to have a protection of property rights. That's the first part of the discussion I did earlier, and that's very well understood. Second, however, how do we get educated labor? There is a problem of access to education in the country, but there is also some problem in ability of a government to deliver on some metric, and one of the metric is education. It's not that easy to actually have a system that delivers education effectively, and as much as I like the private sector, I think that the experiments showing that you can deliver basic education through the private sector in a large scale are sort of small and needs to be investigated more. But even in that case, you need a government to make sure that education opportunity is not distorted in the favor of the few, but is a large opportunity for everybody. And the third is the fact that you want a government to generate the sufficient competition in the economy that will create the incentives for capital and labor to be used efficiently. I think that as economists, we know, unfortunately, too little about technological innovation, but for many developing countries, the problem is not technological innovation. The big advantage of being inside the frontier is that copying is good enough. When you approach the frontier, then you face a completely other problem, which is how do you generate the incentives to push the frontier farther. But as development problem, the development problem is by and large the ability to move toward the frontier fast enough. And in that sense, we know that competition plays a crucial role, especially in eliminating the left tail of inefficiency and pushing for a constant upgrade in the quality of the firms that survive. And I think that that is, to some extent, the problem. And so the real challenge is how do you get a government that is not intrusive in the economy, but sufficiently good at delivering some basic goods like education and like some form of level playing field for firms to operate. This is where I got interested in the research that political scientists have done in this area, and particularly Bo Rustin has spoken and written a lot about the importance of so-called quality of government that he identifies as the ability of the government to follow an impartial rule. Impartiality is actually a bigger form of lack of corruption. Very often we talk about corruption, but corruption sometimes is in the eyes of the beholder. In some countries, giving large donations to a future president is considered a legal political donation. In others, you go to jail for it. But the outcome is not different. It's still a distortion that you try to achieve. So the idea that we want to define corruption in a way that is if you want, institutions-free and legal system-free is important. And lack of corruption is, as Bo Rosten say, the impartiality rules, that everybody is treated the same under the law, and the law are designed based on your objective characteristics and not on your subjective characteristics. Now, achieving this goal is very difficult even for developed economies, especially in the face of what? In the face of economic inequality, racial and ethnic diversity, and different social castes or classes. Let me give you an example of where even the best fail. I think that one of the great things about the European Union is that they have an authority aimed at competition, which is more than just an antitrust authority. It is an authority that is designed to make sure that the rules of the game are fairly level for everybody inside the European Union. So they will, for example, proactively intervene to stop the nation-state subsidies to industries. This is something that in the United States we'll have a desperate need of. So I'm sure you read the other day that the state of Wisconsin decided to give $3 billion in subsidy to Foxconn in order to attract Foxconn to locate to the state of Wisconsin. And Amazon is playing this game by auctioning off the second headquarters to see who is the lucky winner in terms of overpaying for having the service of Amazon in its boundaries. And as economists, and there are papers that show that, we know that this is a very dissipative game. This is waste a lot of resources with very limited, actually the evidence suggests no advantages for the state, but clearly a lot of advantages for the companies that receive the subsidies. So in Europe, this is actually prohibited, and the Commission very effectively, most of the time, enforced that. I said most of the time because if you try to look at the banking sector, you see that there is one country with a banking sector which is heavily subsidized. This is called Germany. Most of the local banks are basically owned by the municipalities, and every time they fail, they are bailed out by the municipalities. Have you ever seen the European Commission coming in and trying to enforce the rule of the land against German Sparkasse? Absolutely not. Why? Because Germany is a stronger nation within the European Union, and so the law is not enforced equally. There is an advantage for some at the cost of others. So if you are the state of Cyprus, you can be guaranteed that the law would be applied very rigorously against you. If you are the state of Germany or France, maybe not. So I think that this is to say that this is not easy even among the most developed nation, even in the most advanced institution. So it's clear sort of why this is very hard. Now, when you define development this way, it's obvious that development is inimical to powerful interests. Not just the local interest, as we wrote in the book with Raghu Rajan 15 years ago, but also the global interest. Now, you don't need to go to the dark ages of banana republics to say that international companies influence the local political system, and they might influence it in a way that is not beneficial to economic development. It's funny to live in the United States now when most of the citizens are shocked of the possibility of a foreign influence in their election. As an Italian, I can tell you that there's been no election since World War II in which we had no foreign interest. We're used to that, and I'm talking about Italy, which is not the most underdeveloped country, maybe it's becoming one, but it's not, and so imagine all the other one. To some extent, it is surprising how development can take place. And if you look at the big successes in development, from Singapore to Taiwan, from South Korea to China, the big success stories are, number one, not democracy, or at least they started as non-democracy, they might become one along the way, and with a fairly strong state. And why they may have been successful, in part, if you look at Singapore, in part is a threat for survival. Again, competition might drive efficiency, especially when the alternative is to be wiped out by the neighbors who are much stronger than you. The second is the fact that Singapore, and I will come back on that, did not have any comparative advantage, maybe except location, but there was no gold, there was no oil, there was no natural resources. In fact, even water was shortage in the island. So, and then a political virtuous cycle when you start to see that the political survival of the people in place is very much connected with delivering higher growth. I think that that might be a good indication. But so the question is sort of, number one, why development is taking place at all, given how inimical it is to the powerful interests. But more importantly, who are the powerful interests? If you go to developing countries, from India to Nigeria, from China to Indonesia, you clearly have a local elite that is influential. But you clearly also have a lot of international companies that are important and influential in the game. And do international companies benefit from a level playing field? First of all, almost by definition, the political powerful do not. Being political powerful means that you can tilt the political game to your advantage. So, of course, if you are in that location, a political powerful company, you don't want a level playing field, because the level playing field will allow a lot of other companies from a lot of other countries to be on equal footing with you. So in that sense, you don't want to do that. You don't want to do that individually, and to some extent, you don't want to do it even collectively. I remember many years ago I went to India, and at some point a friend told me, why don't you go and shop in a government store so they will not cheat you? And, you know, as a Chicago economist, I was very perplexed. And I said, wait a minute, why the government stores are better than the private stores? Why the government can deliver something that the private market can do? Why competition is failing in this case? And actually, I went and shopped, and it's true that they were not overcharging. They were not even service you very nicely, but they were not overcharging you. And then I realized it's obvious. In a world of competition, you're going to compete in the dimension you can make more money with. So if the only dimension you can make more money with is by being kinder and gentler with the customers, you will. If you can make more money by cheating, you will. So in India, the freedom of competition is also freedom to take advantage of customer in the most extreme possible way. So you need a system in place to make these abuses not possible. And then when you have the system in place, then competition will walk in the right direction. But now, really, foreign companies want this to take place? In fact, like government stores in India have a better reputation because of the alternatives. I think very often international companies have better reputation and better business opportunities because of the alternative. In countries where, for example, you don't trust the central bank, Vodafone has a comparative advantage in issuing M-Pesa, a currency that is actually the most important digital currency today, in spite of what people say about Bitcoin. And part of the story is that if you are in Tanzania, you believe in Vodafone, the more you believe in local companies and local governments. And so it is to some extent, paradoxically, the interest of Vodafone that you don't have a good enforcement of property rights and a good enforcement of the law, good enforcement of throwing in jail the crooks, because that helps you survive and have a comparative advantage. But this is where I think that the interaction with natural resources play a particular big role. There is, as you know better than I, a big debate in political science and economics about the so-called natural resource curse. And recently, Steve Haber, a political scientist, has debunked with the data this theory, saying, look, you can mention how many countries you want that have been destroyed politically by natural resources. You can mention many others who have benefited without a problem. Think about Norway or England when they discover oil. Think about Australia, they discover gold very early on, etc. And they're not being hurt by those natural resources in any possible form or way. Now, why do I mention this? Because I think there is an important interaction between the quality of institution and democracy, the opportunities that a country have outside the natural resources, and the discovery of natural resources combined with the influence of foreign cooperation in the natural resource field. So there is a big difference between young Australia and Libya. Young Australia developed, first of all, under the supervision, let's call it that way, of the British Empire, but also there were a lot more opportunities than just gold or natural resource in Australia. You go to Libya, and there are not so many other opportunities outside oil. So the combination of weak local institutions, weak alternatives in terms of economic source of power, makes it particularly easy for foreign cooperation to distort the local institutions to their advantage, creating particular links that are beneficial to the corporation themselves, but not beneficial to the country of destination. And I think it's not a coincidence that one of the best, if not the best country in Africa, which is Botswana, best in the terms of institutional development and economic development, lack of corruption, and so on and so forth, is a country that fought very hard from the beginning to keep the foreign influence under bay. And I don't know if you have seen the British movie A United Kingdom, where they describe the story of Seretse Khama, who was the king of Botswana and then transformed Botswana into a republic. But that is very indicative of the role that local institutions had in preventing the rules of the game to be distorted by the foreign corporation. And so this is what I think is particularly important to discuss here at the World Bank in a debate about how to promote development. What is the responsibilities that we as Western nations have in delaying the development of most of the world through the influence that a corporation mostly located in Western countries. Now, China is coming quickly to the game and playing the game with gusto, so I think it's a little bit unfair saying just Western. However, traditionally are by and large Western cooperation. And many of us have studied the distortions that lobbying power and corporate influence has on US policies and politics in general. And multiply by a factor of 100, those are the distortions that the very same companies generate in developing countries. And this is where we have a very important decision to make. Because thanks to new discovery of oil and gas, in the next decade, some of the poorest nations in Africa will receive $3 trillion in royalties. $3 trillion can solve most of the capital problem in Africa, can solve all or most of the development problem in Africa, or can create a class of plutocrats that not only will destroy Africa, but will destroy capitalism itself as we know it. And the choice is ours to some extent, is how those royalties will be paid and whether they will enrich brutal dictators or they can lift Africa out of poverty. What can we do practically? As Alsley said correctly, I don't like only to study the world, I would also like to change it. And I think studying is to promote change. And in this respect, this is a very important area where we can promote change. Now, there is one solution that has been proposed and was actually gaining quite a bit of momentum. And that solution was the Extractive Industry Transparency Initiative. And as it was going, will force all companies, in particular oil companies, but every extracting companies, to report in their annual report how much money they've given to each individual government. This will be very useful in order to make sure that no money is paid under the table. But most importantly, the local governments will not waste that money or make that money disappear. It's trying to build on more accountability at the local level. Now, unfortunately, as great as this initiative is, has a bunch of problems. The first one, and probably not the least, is that the United States under President Trump decided to back out of pressuring companies in this direction. So the momentum at the corporate level has disappeared since that change. But also is presuming a level of accountability of institutions that in many developing countries is not actually there. And there is a risk that the solution might promote either other form of side payments, and in particularly one of the biggest scandals, which is local development. The way corruption takes place these days, most of the time is not with bags full of money, is simply granting some friends of the local powerful some rights to be part of their development prospect. And as every corrupt idea, there is a nice front end. The nice front end is we want to help develop the local expertise. But these local expertise are basically, most of the time, local cooks who get a share in the development as a reward for the favorite treatment given to the Western company for that development, and more often than not, rebate some of that development to companies that ended up being owned by some manager of the Western company. So I think that local development is a big source of problem that needs to be analyzed. The second idea that actually was developed by Larry Diamond, a professor of political science at Stanford, goes under the name, and a very attractive name, of Petroleum to the People. And the idea is, instead of simply publishing the amount that the Western companies pay to the locals, why don't we go straight and we make sure that the Western companies pay those royalties directly to the people involved? And if you think this is crazy, it's not that crazy these days for two reasons. Number one, that's not that far off what happens in Alaska today, and all the evidence suggests that is not a bad outcome. Second, the idea of distributing this money to every citizen of, let's say, Nigeria or Angola is much more feasible today than was even a few years ago. As M-Pesa, this digital currency development in Tanzania, shows, the combination of technology and cell phones, particularly smartphones, makes banking, even remote location, easy. And so it's not out of the possible feasible set to conceive the fact that you might distribute
this amount of money through cellular phones to the local population in an effective way. And by the way, the side effect of this initiative will be also the one of promoting banking and financial development throughout the African continent. So this is, in a sense, a rare case of win and win solution. There are, of course, problems. The first one is if you go on a per capita base, not only today but also in the future, this will be a reward to fertility. And I think that the last thing we want to, in this moment in Africa, is to promote more fertility, because that will create even more problems down the future. Now, this can be fixed in some ways, but the most important problem is that this is not something that local governments will like. And now, notice that nothing prevents, and this is the beauty of this initiative, nothing prevents those governments to tax some of the money back. So what you're doing is simply, in a very cogent way, change the default point and then let the force to renegotiate. So you're not taking away the right of government to use those resources for all the good initiatives that they have. You're simply making them more accountable to people, because it's different to receive your money and be taken away, which, by the way, will be also useful to develop a more efficient form of taxation in many of those countries. So that there is the side benefit, but it's much easier to receive the money straight from Western companies than to tax the recipients of the money they receive. But this is where I think there is a phenomenal opportunity for the World Bank. So no individual country will love to do that. Actually, I should say, no government will like this initiative. The country might like it, but no elected government will start this process. And especially, they will not start this process if they are the first country to do that. And so, for a government, it would be political suicide to do so. However, an international organization like the World Bank will find itself in the conundrum of saying, why do we dedicate a lot of resources to promote development in a country that actually misuses the most important resources they have at their disposition? And they misuse, I have to say, with the willing cooperation of the Western companies. So it's not that there is this notion that those countries are bad. Corruption is like prostitution. It takes two to do it. And the most effective way to eradicate it is not necessarily to punish prostitutes, is to punish the Jones. And in the same way, in corruption, the most effective way to eradicate it is not to punish the corrupt governments, but is to punish the people who corrupt. And so, why the World Bank will not start an initiative of saying we are stopping any aid to any country with natural resources that will not follow the protocol of auctioning off the resources in a way that we deem to be fair, and automatically distributing the proceeds of that auction to its citizens in a way that we monitor to be fair. And only upon this condition, we can work with that country, we can invest in that country, we can help the country. But if this condition is not satisfied, I think that is not useful to waste other resources after the one they already waste in the current situation. And ironically, I think that the biggest resistance to this policy will not come from the developing countries, will come from the developed ones. And this is, again, to my theme, is the biggest opponent of a good capitalist system are the capitalists today, the one with power today. So concluding from where I started, I think that the world needs still to save capitalism from the capitalists. It needs more creative ways to do so, and I think the World Bank has a unique opportunity to do so. Thank you.
Thank you, Luigi, for these wonderful comments. So we now turn to the floor. Please come to the microphone for comments, questions.
Hi. I thought there was a tension in something that you said about property rights, that pressure from the international community promotes property rights and promotes development. But then when you spoke about Botswana, you said that one of the reasons they're so successful is that they prevented the influence of the international community. So can you speak to that, please?
Let's take, why don't,
Thank you, Professor Zingalis. I have a question about what should be the role of the World Bank, as you said in your concluding statement. It seems to me that unlike the case of US, where democracy helped the environment of competition to come up, it didn't help in India in the beginning, although it's a democracy. And also, although the government control of business was more positive in Korea and other East Asian countries in the beginning, it wasn't like that in India. So it looks to me like the most important factor is how can you help these governments to develop institutions within those countries which will lead to the right amount of right kind of government control when Western companies come to these countries for the development of the resources, like hydropower in Nepal. So in that direction, it seems that the focus has to be, from the World Bank perspective, not only on infrastructure investment, but also in investment for development of capacity in those countries, for the institutions in those countries to be able to deal with the foreign direct investment when it comes in for the benefit and welfare of its own people. Would you agree on that?
please go ahead.
Luigi, in the first part of your talk, you made a very eloquent argument that the answer is more democracy. And I wasn't clear if that was the same answer in the second part of your talk on development. Isn't a big part of the problem of development the prevalence of autocratic regimes in poor countries? That makes it even more likely, according to your story, that incumbent capitalists who don't want development will get their way with an autocratic regime than with a democratic regime. It may be that economists don't know what to recommend, how to promote a shift from autocracy to democracy. But just as analysts, doesn't it seem that a big part of the problem of development is precisely that shift from autocracy to democracy?
Thank you, Bill. Sure. You want to take some? Yeah.
Thank you. Does it talk? No. So thank you very much for all the excellent questions you have asked. So let's start from the first one on Botswana. I think you pointed out exactly the important distinction. There is a difference between enforcing property rights and allocating property rights in a perfectly fine way. So I debated recently two Chilean economists in front of a group of Chilean MBAs, and they asked me, is Chile a chronic capitalist country? And I said, yes, absolutely. And they looked at me like I had a third eye and said, wait a minute, Chile represents all the top ranking, and I know I touched a sensitive topic here, but is top of all the statistics of the World Bank in enforcement of property rights, doing business, etc. And I said, absolutely. But that's the first thing I'm describing, enforcing property rights. The second is about allocation. So I started the allocation and said, you know, a country like Chile, the most important resources is what? Fishing. How they allocate the fisheries? They give it for free to a family that supported the fight against Pinochet. Very worthwhile fight, but not, I think, fair to pay $500 million. That's basically the value given for free to the Angelini family, by the way, of Italian origin. And when they said that was an exception, I said, wait a second, I thought that actually the daughter, actually the son of Bachelet received money from who? Nothing short as the son-in-law of Pinochet. Why? Because he owned a nickel company. Surprise, surprise, owned in or acquired in a privatization under Pinochet. So I think that this is to say you can be very good on all the statistics of doing business and being a very corrupt country in the literal sense of the word. And that's an invitation to the World Bank to actually integrate those statistics with some statistics on how things are effectively distorted. And this leads me to trying to answer the second question, which is how do we build government capacity? I think, and if a Chicago economist tells you this, you better believe it, that having an efficient government, an effective government is important in promoting development. And the essence of my talk was that especially when there are big resources in place, the interest of Western nation is not to have a local efficient government. That's the story of Botswana, that's the story of a lot of other places. The foreigners are better off having a country or a government that is inefficient and corrupt, because at the end of the day, they can extract more in that situation than to have a situation where they have to bid the fair expected value of all the mining prospects they acquire. And this leads to the final question, the one of Bill, that correctly pointed out a tension that, to be honest, I've not resolved, as I am a big lover of democracy. But I am also conscious that in a country with a weak state and a lot of money at stake and powerful foreign pressure, it's not obvious that having a democracy in the sense of having regular election in which you vote is the best way to solve the problem. In a sense, we have seen Singapore arising very effectively with a government that is not democratic by Western standard. Now, the benefit of Singapore, paradoxically, the benefit is they did not have any natural resource. And so it was easier to have a strong government because it was not necessarily opposed by any international pressure. And the point I'm trying to make, and I realize that I'm late to the game because many people have made this point before, so I'm not trying to be original, I'm trying to be relevant. And the point I'm making is many of our theories are based on fairly advanced nations where external pressures are minimal. But my line on Italy being influenced by foreign pressure all its life suggests that this is not the case for most countries in the world. And so as economists, and particularly economists dedicated to development, we need to understand what is this influence. And it's not obvious to me, I wish it were true, but it's not obvious to me that a democracy in the sense of a country having regular elections might be more effective in preventing foreign distortions than some form of partial democracy or more autocratic regime. It's not obvious either in the alternative. I just don't know. And I think more research needs to be done in this area.
Rejoice.
Good morning. Thank you, Luigi, for the presentation. My name is Albert Zufak. I'm the Chief Economist for Africa at the World Bank. Two questions. One on corruption in extractives in Africa, and the second on cash transfers and your impact. On the first one, I completely agree with you that it takes two to tango, as in prostitution, as you said. And when you look at corrupt contracts in Africa, in the area of extractives, they are always signed by a corrupt government official in Africa and a corrupt company from the Western world. So you mentioned what the World Bank should be doing. What should be done in Western capitals from your perspective to curb corruption in extractive in Africa? I think that's an important question, and a number of countries, including yours, are certainly big players in the field. Second question, you mentioned that increasing cash transfers, and by the way, I agree with you that with technology and mobile phones and increased access to finance in Africa, it's much more easier to implement cash transfers than before. But you mentioned in your speech that increasing cash transfers would lead to increased fecundity, and that's something I haven't probably seen clearly established. From our research and from really rigorous impact evaluation, what we see instead is that increased cash transfer leads women to invest in their children, invest in education and health. So I'm not sure if you could clarify that point and the evidence that leads to that conclusion that increasing cash transfer would lead to increased fecundity. Thank you.
Thank you, Albert. I'm afraid I'm going to stop the questions from the floor because we're going to have to leave at 15. And I want to give you some time to respond with your final questions. And I have one question of my own. So if you were writing your book today with Raghu, what would be the one thing you would write differently? Okay.
Okay, again, excellent question. I think that the Western nation and the international institutions are honestly trying to improve. The OECD in 1999 issued a general statement against corruption that has been declined in many countries. For example, the UK anti-bribery law, even Italy has a law in that sense, where they make corruption of foreign official a crime in the country of origin, not just in the country of destination, but in the country of origin. And this was not the case until very recently. Remember that in Germany, until 1999, you could deduct from tax purposes foreign bribes in your income statement. So not only was recognized that this was taking place, was accepted, and was part of the accounting system. So I think that the change is taking place. I think it's taking place too slowly, and it needs much more of an effort from international organizations like the World Bank to be effective. So, for example, one thing that actually Cameron used to push in the G20, and then he lost his premiership, but is identification of the ultimate owner of every corporation operating anywhere. Because this is the ultimate way in which corruption takes place, and I think this is a very important instrument to make the difference. The other, more sensitivity at the public opinion level on this issue. I am shocked to see in how many countries they say, oh, but, when in Rome, do like the Romans do. And so it's fairly obvious that if you go to Africa, you have to bribe. That's the only way to succeed. And let's not make a distinction. And so I think that that attitude is then perpetuated at the political level, where even trial against corruption, and there are trials, and actually, to your surprise, the Italian judiciary is pretty aggressive in trying to pursue, unfortunately does it with Italian law time, which is decades, but is trying to pursue Italian companies that are corrupt abroad. I'm not aware of France doing the same, for example. The Netherlands has started. Germany is not particularly aggressive. So I think that one other ranking that the World Bank should do is how effective these countries are in pursuing that. I think that's an important dimension. And as far as the cash transfer, look, if the only outcome were to improve education of children, that would be great. So I'm not so sure that the best way to to change Africa is to create some gigantic companies. If the outcome of cash transfer diffuse is a next generation of Africans that are much more educated, I think that would be a great legacy to leave. Ending with probably the toughest question is what I was trying to address in my entire speech is what I would have done differently. I think that the conclusion is, in that book, we were a bit too optimistic about the role that foreign companies could have in foreign countries. And I think that while there's definitely a benefit in it, you go to India and you see that the more efficient companies tend to be foreign-owned. They bring technology. So I'm not trying to go back to the time where we fight the multinational as an example of evil, et cetera, et cetera. It's far from that. But we might have overshot a bit on the other direction and say that now they're so great and there is no problem. And in fact, the problem there is, and we need to be aware of that.
Thank you very much. Please join me in thanking Luigi for this wonderful talk. Thank you very much. Thanks so much, Luigi. That's great.